Hi, Tim Biggam, back again after a hiatus over the holidays, spent it in sunny Florida, now back in a little bit frigid Chicago here, and really that's what we're perhaps seeing in the market going forward. Will it remain sunny as far as equities are concerned, or is there something on the horizon such as, the debt ceiling, sequester? Obviously, Europe has not gone away. That can bring a little frigidity to this market. So I tend to be a little bit in the second camp, especially given this big rally we've had. We're pushing towards multi-year highs in the S&Ps. We're also pushing towards multi-year lows in the VIX, which is a measure of implied volatility. Fancy way to say the price of options. So I kind of like a combination here, given the fact that the market's at or near multi-year highs and options are about as cheap as they have been. I'm taking a little contrarian stance in the overall market, buying some SPY February 146 puts, paying a little bit less than $2. These are slightly out of the money. I just think over the next month or so, we are probably due for some sort of pullback here. Certainly we haven't seen anything of that nature to, lead anyone to believe that, but my trader gut always says, when it gets this quiet, usually it's not a bad time to buy the other side of the trade. So looking for a pullback only has to be fairly shallow. 1.5% pullback will get these puts moving, both from a price viewpoint and also implied volatility, which the VIX being in the mid-13 level is at certainly multi-year lows. We'd probably get a pickup on that as well. So dual effect anytime you buy puts. You usually tend to get not only the price, if you're right, heading your way, but also implied volatility heading your way, which kind of gives it a double bonus effect. Somewhat of a reason why prices are a little bit, juicier to begin with than calls. A trade that I like also on the put side is looking at FedEx. This is a stock that popped up on my overbought screen. I use a 9-day RSI screen. Got over 80, curled back under the past couple days. So looking out again in February, buying slightly out of the money puts here. These are trading at an 18 implied volatility, really the lowest since 2006. So to me, trading is all about probabilities, not certainty. So given the fact that FedEx, which did miss on earnings in late December, has rallied about 8% straight up since then, and given the fact that these puts are about as cheap as they have been in about 7 years, I kind of like taking a shot with the other side here. Again, doesn't ensure being right, but I like to trade probabilistically. So I'm buying the February 97.5 puts, selling some January 97.5 puts that expire this Friday to hedge the position slightly. If it does pull back towards that level, we'll certainly make some money. So until then, I think caution reigns supreme here, given the fact we're pushing out to highs. Free money as expanded multiples, but earnings, I think, ultimately have to grow here going forward. So until next week, this is Tim Biggam. As always, position size accordingly, keeps those stops in place, and good trading. Thanks. Bye-bye.